Hello everyone, this is Alejandro Cremades, and today we're going to be talking about what is cash burn rate. So the burn rate of your company is super critical. It's going to determine whether you're going to be able to do an acquisition, a fundraising round, whether you're going to be able to sustain the current business, to really control your own destiny. So in today's video, we are essentially going to cover everything related to cash burn rate and also help you understand different exercises that you can do so that you can really get to the point and the nitty-gritty of how to really understand and have a clear grasp on your own burn rate. So with that being said, let's get into it. So what is burn rate? So burn rate, in the end, what it means is the amount of money that your company is in essence losing every month. So for example, if your burn rate is 10,000, that means that with already accounting for the revenues, you are losing, let's say, if it's 10,000, the money that you're in the red every month, at the end of the month, after you've paid everything, cost, revenue, everything, accounting with everything, essentially that 10,000 is your burn rate. Now, burn rate is the typical term that is used in venture capital, especially in hypergrowth companies. And basically what is going to help the VC or that venture capital firm investor is to understand how much burn rate you have and perhaps how much runway you have in order to execute your different types of milestones to get to the next stage or the life cycle of your business. So when we're thinking about burn rate and fundraising, so burn rate is going to be a critical component because you need to understand how much cash you're going to require to have left in order to get out there and start raising actively. In essence, typically right now is 6 months left of cash in the bank. So obviously, whether you are, let's say, if you're going out to raise money and you need to raise at least, let's say, 18 months of runway, and in essence, you want or you have a cost of $100,000 every month, which is the burn, probably you're going to be having to raise around 1.2 million if you want to get closer to the 18 months. But that's in essence what you're going to be discussing with investors. Now, when it comes to the runway, really keep into consideration that runway is going to be the amount of time that you have left before you go crushing. So this is in essence what is represented as the plane having enough runway in order to take off before it actually crashes. That is why it's called runway. And for that reason, burn rate and runway really come hand in hand, especially when you're going out to raise money and you need to understand how much burn rate you have versus how much runway you have left in order to execute. So in terms of the dangers of the burn rate or having a high burn rate, so in many instances, you're going to see like the super hyper growth companies, let's say like the Ubers or the WeWorks of the world that have like a crazy burn rate. Now, they are hoping that by having that burn rate, they're going to be able to really capitalize on having a great market share, mind share, and that eventually the costs are going to come in parallel with the revenues and that they're going to be able to design a profitable company. Now, the thing is that when you are also, and that happens, and that may work out well, when you're operating in a market that is positive, a bear market, everyone is making money. Sorry, a bull market. In a bull market, everyone makes money. But if it turns around and you're going into a bear market where everyone is losing money, essentially money is going to dry up, and for that reason you want to avoid having a high burn rate so that you have more flexibility to maneuver in case you need to course correct so that you give yourself more oxygen. So when we're thinking about what's an acceptable burn rate, so there's different factors that really come into place because every company is a different world, every stage is a different cycle that you're in the business, so it's not going to be the same burn rate that is going to be acceptable for a company that is already up and running, that has product market fit versus a company that is trying to validate their, let's say, product or service. So there is certain factors that come into play and that play a critical role, and those are the following. The market and potential reward for the risk being taken. the direction of the general economy and industry, the future availability of capital to keep up this strategy, having a fast path back to profitability and solvency if the above works against you. So when it comes down to how to lower your cash burn rate, I mean, it's really obvious. You're going to be increasing the revenues and you're going to be decreasing the costs. I mean, that's really the obvious factors. Now, there is other things that you can really keep in mind when you're thinking about reducing the burn rate, and some of those factors are the following: staff layoffs, shedding unnecessary office space, equipment, and recurring bills, running on-demand just-in-time inventory, moving to a digital or software product or service instead of hardware. So again, the burn rates is something that you're gonna really keep in mind as you're executing during the 18 to 24 months of runway. Is something that you need to be prepared to discuss with potential investors and also with existing investors. And again, really account for that as well as you're perhaps preparing your business plan or your pitch deck. I would love to hear on the comment section below how you're thinking about burn rate. Also, like this video and subscribe to the channel so that you don't miss out on all the videos that we're rolling out every week. And then also take a look at the fundraising training, which is the program where we help entrepreneurs from A to Z with everything related to fundraising. There you'll find live Q&As, agreements, templates, a community of entrepreneurs helping each other all over the world. And I think that you'll find tremendous value in it. Thank you so much for watching.